Hello everyone, welcome back to Robinhood Stock Market Watchlist Group. My name is Carlos and today is Sunday, September 11th. Very sad, memorable day today, but it is one of our stock market meetings that we like to do every weekend. That way we can be aware of what's going to happen in the next coming weeks. And so it's always important to know what's going to happen before it happens. And so, but one of the important things that we always like to do in some of our meetings is kind of go over some kind of educational material. That way we can always learn, because the more that we learn, the more we're going to earn. And that's always extremely important. And so one of our members requested kind of going over the differences between an amateur trader and a professional trader's way of thinking. And so it's important that we always lean more towards the professional way of trading, and we don't always know what it is unless we're told or taught. And so, but this is really the gist of it. And so an amateur trader will let losers run and hope that they turn around. And that's the key word right there, is hope. I mean, we do not want to use the hope system, because it could be catastrophic. You could be just holding on to what they call a dead horse, something that's never going to turn around. So there must be some kind of system that a professional or a successful trader and investor must use when it comes to when should I buy, when should I sell. And ultimately that's moving averages, and that's something that we've been talking about in many previous meetings. So professional traders will cut losers when a stop is reached and a trade idea becomes invalid. It only becomes invalid because there's a system in place that we use that lets us know when to buy and when to sell. So amateur traders will close winners too early because of fear of giving back profits. Now, fear is part of our emotion, which really is like our enemy. I mean, it really does affect our buying and selling decisions. It's definitely something that we need to be aware of, so we can kind of learn how to control it. And again, that's based on buying and selling signals and or certain algorithms and whatnot. And so professional traders will let winners run until profit order or when a clear signs are given to exit. Trust their system. There's always got to be a system. And for the longest time, if investors and traders were just using that, like the Robinhood app was always a very user-friendly, easy user interface to read, but it just lacked a lot of advanced tools and whatnot. But now they've done some phenomenal work to it. The Robinhood app, a lot of us had to utilize other applications like TD Ameritrade or Webull is another popular one, and so on. And so but it's nice to use different programs together, because it just adds more tools under our tool belt. Or amateur traders will change their trading system after a few losing trades because certain things aren't working, so they're trying different things. When that's not good. There has to be a system that must be consistent. And because the algorithms of the stock market changes by the year, and it has a 10-year cycle. So not only does it have a 1-year cycle, but it also has a 10-year cycle that has different characteristics. And so it's very important to have a system that'll work throughout the entire cycle. Professional traders will stick to their rules religiously and think process oriented, and that's huge. Every trader and investor must have some kind of strict rules that they must never break. And so it's just really important. And that, for example, it's like there should be a limitation on volume, maybe a limitation on price, and so on, or where or what stocks that you should look at, maybe high market cap stocks or high volume of the day stocks. And so there's just a system and a set of rules that we all must have and developed, and we can share them amongst each other. That's a great way that we learn together, especially within our group and in our chat room, because every trader and investor specializes in something different. We may have an investor here that specializes in biopharmaceutical, maybe another person in here that specializes in earnings or technology and so on. And so and that's why it's just really important that we all just kind of learn and work together. It's just the best way that to learn and to really accelerate our experience level. And so amateur traders will close their trades, never look at them, and avoid a learning effect. A lot of times they'll just go on Facebook, hey, I got $1,000, what should I put it on? Because maybe they just sold something at a loss and they just don't know what to do. Where professional traders will analyze their past performance, keep a trading journal, and learn from their past behavior. Not only do they learn from their past behaviors, but also from other people. That way they don't maybe make the same mistakes. And so amateur traders will also sometimes overtrade, revenge trade, and hope to make a lot of money fast. And there's that word again, hope, but there's nothing wrong with making a lot of money fast as long as we do it the right way. But again, a lot of these have to do with emotions. Overtrade, maybe because the stock is just dipping and you're just really trying to buy every single dip and it's just nonstop. There's got to be a certain limit, like 3. If there's more than 3 and it keeps dipping, it's invalid. That's got to be certain rules that you got to put in place as a stop loss protocol. And so where professional traders are aware of their emotional impacts and know how to identify and manage their impulsive buying decisions and buying and selling decisions. Amateur traders open their trading platform and then desperately try to find random trade entries. But a lot of professional traders and investors will just trade 1 or 2 or maybe 3 of the same stocks. And a lot of times we'll look at the most active stock options or certain things, and you'll notice that there's always like a certain top 3. We got Apple, Tesla, and Amazon. Lately we've also added AMD and Nvidia in the top 5. And so these are stocks that are very, very favorable when it comes to swing trading and day trading, especially with stock options, because they don't normally move a whole lot, but lately they're moving more than 1, like 2, 3, 4, 5% in the stock market world. That's huge. Every 1% in the stock options world is like 20, 30, 40% movement in either direction. And usually I always recommend straddling anyways, because straddling, we can buy our calls and puts right before close, maybe like 5 minutes before close, and we can sell them the next day without very little or any time decay. That way, going into the next day, we can sell either at the same time, usually maybe 1 hour after opening, after the day is kind of picked, its direction based on your moving averages, your buying and selling signals. Also, it's just really important that you utilize some kind of a system with all that. Where a professional trader will keep a trading plan and plan their trading day ahead, follow a structured approach. And one of the things, one of the Benjamin Franklin sayings was, if you fail to plan, you're planning to fail. And so it's just really important that we, like I said, we do these meetings. We kind of follow a structured approach by identifying how the week is going to play out, which days are going to be bullish, what days are going to be bearish. That way, if we straddle, we can kind of fluctuate our percentages on the calls and puts. So if we know if maybe a certain day is going to be bullish, maybe we can go more 60% on calls and 40% on puts. That way, in case if the day is manipulated, which that does happen. Those are like curveballs. When you got some kind of massive manipulation in effect, we're very thankful that we had straddled. Otherwise, it could be catastrophic. And so, but usually, as long as we know which direction the day is going to be, that'll at least give us a jump start, because we're more heavier on one side over the other. And so, but again, this is just one of the examples I wanted to use for the differences of an amateur trader and a professional trader. And a lot of you guys will save this image, out of sight, out of mind, and that's why you guys save this image. That way you can look at it daily, print it out, look at it until you have it memorized. And once you have it memorized, you're definitely in that pro category for sure, because at that point I'm sure you're doing pretty good. But it's still, even if you are doing good, it's still really important to look at it regularly. So going further into our meeting, the next important thing that we have, if you guys don't have any questions, we need to look at this week's scheduled economic reports. There's a lot going on between the economic reports, but also there's going to be a lot of talk about recession and all kinds of stuff. But also, this Friday is Triple Witching Day, which we'll get into here. And then next week, the government is going to increase interest rates. So that's another big topic that this week is going to be kind of sketched out on. So. But let's look ahead at the economic calendar. Now, if you're not already using investing.com for part of your due diligence, I highly recommend that you download it to your tablet, your phone. It's a little app from the App Store, but you can also utilize the investing.com website. You'll just need to click on the calendar on the top screen, and then economic calendar, and then we'll want to click on this week. You'll see a lot of gibberish. I mean, if you're not familiar with this stuff, it's going to look like gibberish anyways, but we need to clean it up by clicking the filters button. It'll say filters on the website. It'll look like a funnel on the app. Click on clear. We need to clear everything. Because for now we just need to put a check mark under two things. Put a check mark under the United States, and then under importance we want to put a check mark under 3 stars, because we're telling this website to pull everything that'll have the biggest impact on the stock market, or for the United States stock market. And so once you have those two clicked or checked, click apply, and then we'll have this week's scheduled economic reports that'll have the biggest impact on the United States stock market. Now you can see there's nothing on Monday. Monday is obviously going to be probably the calm before the storm. A lot of us anticipate Monday is going to be bullish. For many reasons, and so but some of us feel that it could be bearish. It could be 50-50. We've seen a lot of that with last Friday's stock options activity. It did show almost a blend 50-50 calls and puts, but it was more on the calls side, and so that's always a good sign. But Tuesday we have some pretty important economic reports, and just to let you know, if you're new to this, there are weekly economic reports that happen every week. Just lets us know how things are going more frequently. Then we have our monthly reports, we have our quarterly reports, and then we have our yearly reports. The more rare the report is, the more effect it's going to have on the stock market. So we see a month report, we see another one here, and a yearly report, year over year. And so that's why it says YOY. And so, but it's also important to know the timing of these reports, because a lot of times it can easily affect the stock market right before the report is released, and as well as right after the report is released. But there's a lot of things you got to keep in mind, such as let's say as soon as this information is released, the news companies is receiving it as soon as you are, as soon as we are. That's why we are looking at this, following this, rather than the news companies, because it takes the news companies, because when they receive this, it takes some time to type out an article or notification and then blast it to thousands or millions of users, and that takes time to get out there, and by then, you know, the market has already been reacting to it. Or with this way, we can receive it as soon as they are, and where we're reacting to it as soon as it happens. And that's one of our pro traits, our pro trading, you know, characteristics is to always be aware of what's going on as soon as it happens. And so when we're looking at it on the website, it's going to be default to Eastern time. So you have to kind of figure out the math, or you can change the little time setting here on the top left of the website. Or if you're looking at it on your device, such as your phone or your tablet, on the app, it'll automatically adjust this time based on your time zone. So again, it's really important that to know if this report is going to be released before the stock market opens. That way we know if it's going to affect pre-market, or is it going to affect the stock market after it opens. That way we can figure out what's going to happen. And one of the best ways to know, to figure out what's going to happen, is the forecast. The forecast seems to show to provide the majority of the characteristics over the previous. So we have the core CPI month over month for the month of August, and this report is scheduled to be out at 8:30 in the morning Eastern time. So so the stock market opens at 9:30 Eastern time, which means that these reports are scheduled to be released 1 hour before the stock market opens. That's during pre-market. So that means it's also going to provide a very good amount of volatility, and that could be in either direction. But we'll take a closer look at the forecast. But this is great for straddling, because one of the key things for straddling both calls and puts at the same time is volatility. That way we know for sure that there's going to be some big swings, and so rather than going into a day where there's no swings, straddling, that's really the only time when straddling could be a disadvantage, is if you're going into a day where there's absolutely no movement and everything's at like 0% and nothing's going on. Or maybe some manipulated earnings, and so we're expected some big movements, and it it does a 0% thing. Then you're going to suffer implied volatility crush, where it'll actually crush both sides, and that's why earnings, when it comes to utilizing options, earnings is a lottery play. Just like if you were to buy a lottery ticket, you know, it's money you're not going to be out on. You're not going to be worried about it if you're not going to be if you're not going to win big. But and that's why most pro traders will just trade heavy on Apple, Amazon, and Tesla. Because they have a very least amount of time depreciation, as long as you stay around the money, which is the share price. So if you're not sure what these reports are, feel free to click on it. A new tab will appear, and it'll describe what it is and how it will affect the stock market. For example, the Core Consumer Price Index, or the CPI, measures the changes in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as positive or bullish for the stock market, while a lower than expected reading should be taken as a negative or bearish for the stock market. And so but after a while, when you click on these, you will tend to remember them, so that way you won't have to click on them and all that stuff. And so, but looking at the forecast versus the previous, the forecast is what's going to provide a majority of the characteristics. before and after, possibly after. And so looking at the current core CPI month over month for August, it's at 0.3, which is at the previous. So right now this is, it's predicted that it's going to be the same. But if it's lower, then we can expect possibly some bearish characteristics after the report, or if it's higher, we could see some bullish characteristics after the report. But with the CPI report, not the core, but the regular CPI, is showing a slight decrease, which is now anticipating bearish characteristics for Tuesday morning. And then we have the CPI year-over-year report, which is a little bit lower than the previous. And so we can see, using these forecasts, that Tuesday is looking like it is bearish just by looking at these at the economic reports. But not only is Tuesday looking like it's scheduled to be bearish there, but again, I have to remind you guys about what's called the quantitative tightening. Am I saying it right? I can't recall. Quantitation or something like that. But basically, it is when the So in 2020, when the government, it was very interesting, the whole COVID situation. We knew that the pandemic was kind of picking up in January, and then February, and then it was like, what's going on, and then it almost seemed like in March, we wanted to finish off the first quarter strong or something. It was really weird. And then in the beginning of the second quarter, which was March, that was when the government wanted to shut everything down for the entire second quarter. So that is your, you have your April, May, and June. June was when we started to kind of begin to start opening some things back up. So when the government shut everything down, nobody was driving, nobody was doing anything because everything was closed. They go home, stay home, and they're going to pay us. They paid us thousands of dollars with the stimulus and whatnot. Because the government is getting ready. This was like an investment. I the way that I kind of see it in their eyes, but where everybody's paid because they're about to make a fortune. Everything plunged down to some of its lowest records, and like Boeing was $300, went down to $90. A barrel of oil, which was like what, $40 a barrel or so. We watched it plunge under $1 a barrel of oil. It was unbelievable. I had no idea, because the oil inventory levels were full. They were beyond full. They were still pumping oil or buying oil or whatever that they were doing. They had no place to put it. So they started to they started to use those ships, the oil ships in the ocean. They were like, here, we'll pay you a fortune if you guys could store our oil. And so, but oil prices just plunged, but they had to kind of, keep it going, but it plunged to nothing. So at that time, the government was pumping up the United States stock market with about $500 billion every couple weeks. This is called their quantitative easing. And to me, I called it the pump days. These were scheduled to happen. We shared the information within our group, because when the government was buying these stocks, they were pumping up the stock market. They were looking at it as a way to keep the economy afloat while everything was shut down. But like I said, they were buying things at dirt cheap. And they did that for quite a while. And so, but like I said, I would post that in our group. That way we knew what dates that this was going to happen, because on those dates, every stock was almost guaranteed to be green. It was easy money because we knew what was going to happen before it was going to happen. Now we're having the opposite effect. Now the government is selling the stocks that they bought. And so, but not in a huge dollar amounts. We're seeing well, it's still billions of dollars. We're seeing, 5 billion, 13 billion, but it's still enough to provide a significant movement in the stock market. And so, but what we're seeing as an algorithm, we're seeing as a Tuesday and a Thursday. So, and with the economic reports, and as well as with manipulation, if a lot, and these guys, and hedge fund companies, they're all very, very smart. And what we do is, well, what they'll try to do is to make a bearish day more bearish by using, by strategizing and scheduling, bearish news. And on bullish days, when we know something's going to be bullish, they'll make sure that things are, whether it's economic reports or something like news, is scheduled to be bullish for a bullish day. And so that's why we can see some pretty big, volatility and big swings on certain days, because when we're putting a lot of the pieces of the puzzles together, it just makes a lot more sense. And so, but yes, we're seeing Tuesdays and Thursdays are pretty much what now I'm calling our dump days. And so again, as long as we're aware of what's going to happen, we can buy puts right before the market closes the day before, and at least go heavy. So that way, if we're straddling, we can go maybe 60% puts and then 40% calls, just in case if somebody comes in with something to manipulate it in the other direction. And so, but like I said, it's not huge. It's not like hundreds of billions of dollars, but it is, it is a significant amount where it will provide a big swing. But after a while, with some time, we'll notice that things start to cool off. Rather than twice a week, it looks like now it becomes weekly as we go into December. And then as we get into, what does it look like, March or something, then it's every couple weeks, and then it's once a month up until next year of August. But at that time, right around that time, we're going to have a phenomenal bull season that's going to last 6 months rather than a half-ass 3 months that we just had. But yeah, it's going to be long overdue, but it's going to be a phenomenal next summer. But unfortunately, we have a long ways to go. So looking ahead at this week, it's always important that we utilize calendars when we become a pro trader in the stock market. It's very important to know what's going to happen before it happens, whether it be holidays, triple witching days, like this Friday. So it is September, right here, right there, Friday 16th. Look at that. We have a trifecta of all kinds of stuff. And if you're not sure what triple witching day is, it says right here, expiration of equity options and index options and futures. Basically what that means, it kind of forces a lot of investors to sell and to kind of reposition or to redo whatever. But obviously going into the next following week, like on the Tuesday the 20th and Wednesday the 21st, is when we have a lot of the federal interest rate hikes. And there's a website for that too here on the Federal Reserve website. We can see right here September 20th and 21st is going to be not only the meeting associated with the summary of economic projections, but also the interest rate hikes. So a lot of people during this coming week may just sell and not get into anything at all until maybe after they see kind of what happens this next time. However, when it comes to straddling, bring it on. When it comes to straddling, we love volatility. We will buy a lot of calls and a lot of puts going directly into that because we love the volatility, because you can only lose what you have in one hand, but the gains in the other hand are potentially unlimited. You can make you can lose maybe 100% in the other, but you can gain 200, 300, 400, 500%, if not thousands of percents in the other hand, which will outwash the loss in the other side. And so so this is what we're looking for. This is bad news is great and phenomenal news. Let's bring it. And so let's go back into the economic reports, because there's more activity happening. And so Wednesday, we do have an economic report that is scheduled to be released during pre-market, which is good. This is good momentum. Again, as you can see, things are placed in perfect timing. So we got 1 hour before the stock market opens. We got another one here 1 hour after the stock market opens. And so always the first hour and the last hour of the day is the most volatile times of the day. And so this just adds more momentum, keeping Wednesday even more volatile than most. And so we see that the PPI report month over month for August, another good and rare one to have in here, is showing that we are at another decline, just not as much as the previous. So this could mean a slowing down, and maybe going into the positive direction soon. So this is actually bullish news. And so again, we know that Tuesday and Thursdays are the quantitative tightening days, where the government's going to sell their stocks. And so Wednesday could be a good recovery day. So if they see that this report is maybe slowing down and maybe soon going in a positive direction, they like to kind of think ahead, and again, this could be bullish news. But we also have to look at the crude oil inventory levels. Now, this is a weekly report. We need to see what this report is going to do, because right now there's no forecast, but there will be a forecast probably later tonight or tomorrow morning. But it's very important that we look at what this is going to say. However, I think it's very obvious that it's going to be down. Now, there are two reports where we need the numbers to be down rather than up. Most of the reports we need them up, but the two reports we need down is the crude oil inventory levels and the initial jobless claims, which is the unemployment report. The reasons why we need these down is because the crude oil inventory levels would indicate that people are driving and flying and spending money, and not only on that, but on vacations and trips. And that's good for the great for the economy. Unemployment report: people will be getting they're working, they're getting an income, they're spending money, and that helps the economy. So we need people to be working. That way, it provides more bullish characteristics. And so by looking at the crude oil inventory levels, we see that the previous report was extremely high. So the previous week, nobody drove anywhere. And right now we're seeing a lot of forest fires, and so I'm over here in the Seattle region, and there's a lot of smoke in the air, and so I don't think there's a lot of people that are driving right now, so that could be an effect, as well as it's hot. So I think a lot of people are just staying indoors with their air conditioning, as long as they're not going through a power outage. And so, I mean, things are just kind of a mess right now. But typically, what we'll see, even though gas prices are still pretty high, but they're getting down there more at a maybe more of a comfortable level than before. But typically, since these high gas prices have happened, we've seen a kind of a bi-weekly effect, where most people get paid every 2 weeks with their job, and so they're going to their favorite gas station, filling up with the least expensive gas, trying to make it last for 2 weeks. So what we're seeing is 1 week we have a very high level of oil and fuel, which is bearish, and then the next week it's very, very low, which is very bullish. So that is what the characteristics we should be seeing next. Is we should be seeing a very low level of crude oil inventory, which is bullish. So far, I feel I am bullish for Wednesday for several of these reasons. The economic report, because it's a day after the quantitative, or the quantitative, man, I got to figure out how to pronounce that. The tightening, basically the sell-off, and then Thursday. So another little sell-off there. We have all these reports. My goodness, we have 4 reports that are scheduled to be released 1 hour before the stock market opens. The first one is going to be the core retail sales for the month over month for the month of August. Now, August is usually your kind of like your vacation type of month. There's a lot of like state fairs, county fairs, all that kind of stuff that's happening, and so there's not a whole lot of I would say retail sales, and that's why it looks lower. We have a 0.2%, which is lower than the previous report of 0.4%. So far this is already indicating bearish characteristics. Going to the second one, unemployment report was very surprisingly low last week. It went down at 222,000. Normally when it does that, it'll usually kind of bounce. And so it looks like it should now anticipate bouncing upwards, which is again bearish. So we see so far 2 bearish characteristics here. Going to the third one, same thing. The Philadelphia Fed manufacturing, where the previous month was at 6.2%, is now anticipated and forecast to be half of that, or almost half of that, at 3.5. And so, but with the retail sales month over month of August, looks a little higher than the previous month, which was only at 0%, is anticipated to be at 0.2%. Now, it's important that we look at this stuff regularly every day, because sometimes these forecasts change. It's very interesting, because I find it as a way that they can manipulate it. And a lot of times we'll talk about this here, and then come Monday, all of a sudden, you guys will catch it. You'll be like, well, they changed the forecast, now it's this. So that's why it's important that not only do we look at this stuff on the weekends as we do our due diligence, but also every morning and throughout the day. That way we can see. Sometimes they may throw in an extra thing in there too, and so that wasn't there before. And so that's why it's really, really important that we always kind of go over this stuff. So the next important thing would be the earnings. So let's take a look at earnings. So everything that I post in our group can always be found, and it's saved under our featured area. So with the earnings this week, here it is. It's scheduled that I get it from our earnings whisperers. Nothing for Monday, but we have, actually this is old. Hold on here. I don't know. There we go. So we got Monday, Tuesday, Wednesday, Thursday. Basically, we are towards the end of the earnings season, unfortunately. But going into next month, we'll start a whole new season. So, but there's a few really good ones in here that we'll kind of go over, such as our core main, and there's a few new ones as well that have never been listed here before, and some of them are fairly new IPOs that have been on the stock market for, I think, the last 3 quarters or so. So, but out of many of these, Adobe is going to be probably one of the big ones, BPR, and the life cycle. So starting off with Oracle. Oracle is scheduled to release their earnings Monday after the stock market opens. The company's earnings release has a 73% expecting an earnings beat, which is pretty good. Most average, these have about a 64-65% expecting an earnings beat, so this is considered above average.
Carlos, sorry, Carlos.
Sure.
The guy would might be off mute because there's a lot of noise coming.
Okay, looks like Patrick, for some reason I'm not able to mute you. Patrick, can you mute your mic? Patrick, are you still there? Can you mute your mic, please?
I'm sorry. Yes.
Thank you. But if you have a question, feel free to unmute your mic. You can say something, but yeah, if you don't have anything just yet, go ahead and mute back up. But this is completely open. We can share. We can do all kinds of stuff. There's no restrictions here. But so the Oracle, again, not only does it have a 73% expecting earnings beat, that is considered above average. Option traders are pricing in around a 6.5% price movement, which is about normal. It normally moves around 6 to 7%. But a lot of times I'll post a picture because a picture can say 1,000 words, and by looking at the name Oracle, we might not know exactly what it is. But the picture may kind of give you clues of that, it's kind of a technology company. We got cloud applications, so they're maybe more of a network type of company. And then Adobe's been around forever. Everybody knows Adobe. They have so many programs. They've bought so many programs. But Adobe, again, is scheduled to release their earnings report Thursday after the stock market closes, Thursday, September 15th. The company's earnings release has a 70% expecting an earnings beat, which is very good for Adobe. Option traders are pricing in around a 6.5% price movement, when normally it moves around 4%. Next one, and I believe this is a new one. I've never posted this out since I've created the group almost 4 years ago. This is the first one. It's been listed on here, where it is Acoustics Technologies is scheduled to release their earnings report tomorrow morning, Monday the 12th. The company's release has a 69% expecting an earnings beat. However, option traders are pricing in around a 30% or 33% price movement in either direction. And obviously, I couldn't find a good picture in this one, but obviously it's they specialize in like 5G and upgraded Wi-Fi technology and whatnot. So they obviously must be a new company that is that may be going somewhere. So it's definitely a good thing that we can kind of start doing some due diligence to figure out what more about the company and maybe what direction they're headed. Same thing with the BRP. This is the first one. It has also ever been listed in our group, BRP, and then we can see this. But when we're looking at this, these aren't gas. These use electric. We have like quads and these marine vehicles and bikes and snowmobiles and so this is very interesting. So however, they're scheduled to release their earnings report on Wednesday morning before the stock market opens, Wednesday, September 14th. The company's earnings release has a 70% expecting an earnings beat, as more and more governors around the United States are implementing deadlines by 2000. Like my state of Washington State, our Governor Inslee made a deadline by 2030. All gas vehicles are discontinued by 2030. They have to be all electric, beating the Hawaii and California to their 2035 deadline. As we see that more and more, we're going to see a domino effect with other states that are doing that. And as we see that, we're going to see more and more of these guys pop up out of nowhere. Core and Main, obviously they're a construction company. They must be a pretty good national one. But we can see they've reached some kind of top distributors list for 2022. But they've been listed in our group a few times in the last year, where Core and Main is confirmed to release their earnings on Tuesday morning before the stock market opens. The company's earning release has around a 62% expecting an earnings beat, which is just below average. However, option traders are pricing in around 11% price movement in either direction, where normally they only move like 3%. So there's definitely something that option traders are pricing in a much larger price movement. As we get more and more involved in lithium-ion batteries, we're getting more involved in recycling them. And so Li-Cycle Holdings have been listed in our group a few more times lately, as these batteries are becoming more and more desirable year after year. They're confirmed to release their earnings report Wednesday morning before the stock market opens. The company's earning release has around a 72% expecting an earnings beat, which is slightly above average. Very bullish on this one. Option traders are pricing in around a 13% price movement in either direction, where normally it moves around 5%. So again, option traders are pricing in some pretty big movements on this one, which is great for straddling. But again, when we're straddling or doing options with earnings, we want to again consider these as lottery plays. Next one up, this is another new one that's never been listed in our group before. It's called Matrix Services or Service. As energy has become a really big topic lately, Matrix Service Company is confirmed to release their earnings report on Monday, so tomorrow after the stock market closes. The company's earnings release has around a 52% expecting an earnings beat, which is not good. Very, very unpredictable on which direction this might go. However, we just don't know about how far it could go because it's still being analyzed. This is another new one that's never been listed in our group before. It's called Rent the Runway. Rent the Runway is confirmed to release their earnings Monday after the stock market opens. Obviously, they're some kind of fashion clothing, either store or designing company or both. The company's earning release has a 33% expecting an earnings beat, which is absolutely terrible and very bearish. Option traders are pricing in around 2, maybe a 3% price movement either direction. More normally that's about what it does. And I believe I looked at this not too long ago, and it was a pretty recent IPO, I think around 9 months ago. So since its opening, it's really kind of plunged down to which looks like it's bottom, and it's been there for quite a while now. Next one is this little 10 shipping thing, this however you pronounce it, but it's related to the energy companies. And so the TNP, which is confirmed to release their earnings Wednesday morning before the stock market opens. That's on September 14th. The company's earning release has a 57% expecting an earnings beat. So obviously it doesn't look good for energy, as the last several months energy stocks have been on the decline somewhat. Option traders are pricing in around a 19% price movement in either direction, when normally it moves around 2%. And so again, option traders are definitely going to be looking at this one to be straddling, because we're anticipating some pretty big movements on this one. And it's not on where like the other one where it could move 33%. We didn't know from last week, so it doesn't give us time to get in the day before. But this one gives us a great opportunity. Next one, this is another one that is new to the group, so it's anticipated to be some pretty big movements on this one. Evolution Petroleum, again part of the energy segment, is scheduled to release their earnings report on Tuesday after the stock market closes. The company's earning release has around a 40% price movement in either direction. However, option traders are pricing in around a 13% price movement in either direction, where normally it moves around 3%. So option traders are pricing in some big movements with this one. Now, after we've kind of do our due diligence with quite a bit of this stuff, it's always good to look at investing.com's the top 5 things to watch in the markets during the week ahead. And so a lot of times we'll find things in here that we've already gone over, but it may say or find there may be some information in here that we haven't talked about. But rather than going over it, we'll just kind of skim through it a little bit. But you can always look through it. I always post it in our featured areas in case if you can't find it in investing.com or didn't receive the notification. I always put it in there for us anyway, so that way we can easily find it. The first most important thing that we got to watch out for is that CPI and PPI reports, which is the consumer price index. Those are the economic reports that we went over. Very, very important. Like I said, those are going to provide the most volatility in the markets this week. Number 2, pair of the key earnings reports that we just went over. Number 3, the Corebridge Financial IPO, which there are some IPOs coming out this week. I did post some of those in the we have a new IPO chat room, so I did post some of these, which I just pull these from the Webull application, so that way it kind of lets us know some of the big names that are scheduled to be released, IPOs this week. All right here. So there are some pretty interesting IPOs if you want to look into that as well. Number 4 is the big investment conferences and Starbucks Investors Day. So I think one of you guys had posted some information on that. That'll be interesting. With the summer over and earnings season is in its quietest moments, many companies are hitting the road to meet with investors. Investor conferences and presentations often feature strategic updates and announcements, shifts in sell-side analyst and market thinking, and even deal making. A few notable conferences or analyst days this week would be like Goldman Sachs, plus a technology conference featuring companies such as MongoDB, Warner Brothers, and so on. So I mean, there's a lot of activity going on this week with these companies that can also affect other companies as well. So hopefully these are going to be on the bullish days, not the bearish days. So I don't see. We see all have investors or analyst days on Tuesday. So, but keep in mind that even though, so a lot of us try to figure out when the government is selling their stocks. We're trying to figure out, are they doing it during pre-market? Are they doing it after the market opens? Are they doing it all at once? Or are they doing it kind of sporadically? We're still trying to figure that out. We do see that we do see kind of some dips during the pre-market. However, I feel that could be investors just selling before the government sells their part, because the days that I'm seeing this quantitative tightening is that we're seeing a massive dip in the middle of the day, hours after the stock market opens. And so that could be maybe the big amount that they're selling all at once. And so, but that may be creating a chain reaction. But there could easily be a recovery. People could buy. Bad news is good news. We start getting ready for the next day. So if Tuesday dips, if it does that again, we start buying calls on these massive dips during the middle of the day and right before close, trying to go heavy on calls, like I said, 60%, and then right before close we buy our puts. That way we're straddling the next day with a great amount of gains, and then we'll sell them the next day, and that's considered a swing trade because everybody has unlimited of those. Because most people with accounts under $25,000 are limited to 3-day trades per a 5-day trading period per application. Number 5 is the Russia-Ukraine developments and aftershocks. So basically, in a nutshell, Ukraine has gained some territory in the northeastern part of Ukraine, while Russia is saying they didn't retreat. They are regrouping in another area. They basically let them have it, And so most of us will say that when we see these types of events happening, it provides bullish characteristics. But in reality, it makes you wonder what is going to be Russia's next move that will provide bearish characteristics. And so just be prepared, and that is why we always straddle, because we always like to be prepared for the unexpected. And so that is the top 5. We went over the economics, we went over the earnings. Let's go over the options activity for last Friday. Going into the weekend and Monday, we see that Tesla has really dominated. My goodness. Now, one of the reasons why Tesla is probably dominating this list, they didn't really dip down much since they're split like they were supposed to. However, the reason why that is because they have an event coming up in a few weeks. If you didn't know that already, they have an event that's called the Artificial Intelligence Day. And this is going to be their second one. However, also they're going to be releasing or revealing their robots. I have it here somewhere, I believe. Maybe I don't. I think this was it. So Elon Musk confirms, blah blah blah. So yeah, that the Artificial Day Part 2 is basically, it's going to be on the held on September 30th. So this robot's going to be very interesting because it has specs. It'll be able to like walk or run 5 miles an hour. It'll be able to lift a certain amount of capacity, and this is just the beginning of something brand new. But this is, again, this is a market that is, you can't find anywhere else. You can't find a robot that can do things for you in your house or for your business. And so, but he's great at what he does. But he's also great at manipulating his stock, keeping the momentum going. And so when he reveals this, most likely he's going to say at the end of the event that you'll be able to go to Tesla.com and reserve this robot for probably $100. So now he'll say, well, we have all these amount of reservations for this. There'll be hundreds of thousands of them. And these investors are going to go wild, and they're we gotta buy more Tesla. This is going to be huge, And until the artificial intelligence robot market floods itself, this is going to be huge. And so, but all eyes on Tesla, and obviously, always follow the money, and that is why we see that there's a huge amount of activity on Tesla. And not only that, but Tesla was up 3.6% last Friday. And so, but with that, we have a 55% call ratio with a nearly 45% put ratio. So obviously, if anybody's holding, they're definitely straddling nearly 50-50 or 60-40. Going into the weekend. Same thing with Apple. Apple just finished their event, which is very interesting. We were really hoping for them to reveal that electric vehicle. So obviously they're delayed at least another year. It's not going to be a 2024 model, but it's probably going to be a 2025 model. So, but at least we're more certain that this is going to happen, next year, rather than us being uncertain that it was going to be this year. They just went through so many engineers and designers and whatnot. And there just wasn't enough, I think, information or leaks and news about it, other than the fact that they've gone through different designers. But so Apple basically has revealed the new iPhone. They revealed the new the headphones, the iPod Air, or the AirPods, and then the other device which was the iWatch. And so just like most updates, there's not really a whole lot, but the iWatch was definitely pretty significant. Not the main, not the iWatches that they've been using, like the SE and the other one, but they came out with a completely new structured iWatch that they call the iWatch Ultra, and that, or Ultimate, I think it's Ultimate, I can't remember, but it basically we have a 60 hours rather than 36 hours and of battery life.
before recharging. But one of the massive important features was the scuba diving feature, where now you can go much deeper underwater, hundreds of feet, and it tells not only what your body temperature is, but what the temperature is of the water, of the outside of the watch, but also the depth, letting you know how many feet you are underwater. And so, I mean, and now, I mean, not only does it measure like the oxygen level of your body, but the body temperature. You know, and there's just a lot of great safety or health features that watch provides, and as well as the headphones. There wasn't really a major update on that. They mentioned the adaptive transparency mode. It basically, it's like a hearing aid type of thing where you can go on a transparency, but the adaptive one basically will remove very loud sounds, so that way it focuses on certain things that you're trying to listen to. So that was really the only new thing with that. And then the phone, the only major new feature with the iPhone was that satellite SOS call, like a distress call. If you are in the boonies somewhere and there's no internet, there's no cell phone reception, your phone will help you point your phone to a satellite in the sky and make a connection to it. And it communicates with the like first responders and the search and rescue team. And I think we can also send a message to like emergency contacts. And so that way you can get help immediately and not get stuck. Well, Apple and Tesla or Elon Musk are talking about being able to communicate with Starlink satellites. So this is a huge business deal for both of these guys. So, but we can see that both options have a majority of the activity, and that is one of the reasons why these are very favorable stock options, because they're very predictable. They may not move a whole lot, but in the options world, it is significant. And so, but you'll notice that there are a lot of stock options that are here regularly when we're looking at this every day, but then there's also stock options that are not normally on here regularly. And so those are what I call stock options that may be flying under the radars, that we need to really, monitor and watch too, because there may be something going on that might not be announced yet. So there may be something going on like the GameStop. GameStop's been on here regularly lately since the split, but beforehand, before all this, manipulation with GameStop, it was never on here. But after a while, like the whole, pumping up, all of a sudden it became on here. It was $3, $4, $5, and then it became close to the top of the list. It was flying underneath the radar before it made big national news, so that we can catch things before it happens. And this is one of the ways that we can do that. And so, but we can also look for bigger movements on one side or on the other. So, like for some reason, we have Ford Motor Company who have more puts than calls, 60%. Or we look over here, AMC. For some reason, we have 78% calls. So people are investing into AMC, believing that it's going to go up. Maybe it already went up 12% for some reason. And that may be because there's more and more movies that are available in the theaters, like Top Gun and so on. That have been providing huge revenue for that industry. And so, and we can just kind of keep going. There's another one, 72% calls ratio for GameStop. There's just a lot. There's 82%. DraftKings. I mean, NFL just started. This always seems to happen right when when it's football season. All of a sudden, DraftKings starts on the bottom of the list, starts trickling up, and it becomes $15 to $35 or so. And so this is going to keep going on for quite a while. So we need to be aware of any kind of unusual activity. ChargePoint holdings. This is going back to the whole electric vehicle. If more states are going to require more electric vehicles, that means we need more charging stations. And that means they need to buy it from ChargePoint. So we have 83%, of investors betting that ChargePoint is going to keep going up. And so when we're looking at this kind of stuff, we also need to look at under barchart.com, this is the most active options that kind of summarizes the entire system. But we also need to look at the most active individual calls and puts by clicking on the options volume leaders section of the website. Now, when we're looking at it during the weekend, like right now, we'll see a lot of the DTEs will be 0. That's the number of days until that particular option has expired. So if it's expired, then we don't need to look at it because it's invalid. It's toast. It's gone. And so we need to focus on the ones that are still currently current. And so with Apple currently being at $157.37, that means right now the one with the most volume is the $160 call strike price that expires this Friday, September 16th on Triple Witching Day. And so we have a 79,000 on the open interest with a 90,000 of volume, which is good. We always want to see more volume than the open interest because it just shows more interest. And so the next one is Tesla, which Tesla's just right under $300. We have a $300 call strike price. It's very, very expensive, but it has an open interest of around just under 38,000, with a volume of just right around 81,000. So just double the amount. And if you're not familiar with open interest is basically the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning these are options that have been purchased but have not been sold yet prior from the current trading day. Volume is always today's current buying and selling activity, but the current or whatever is the buying activity will then begin to merge with the open interest of the remaining people that are holding. And so it's very important that we utilize both information. So the third one is the DraftKings. So the DraftKings $20 call that expires this Friday, September 16th, is the third most highly active stock option out of the entire system. And look at this, we have an open interest of only 12,000, just under 13,000, and now it's got a lot more interest by 4 times that amount. 62,000, just under 63, and again it has over 80% call ratio over puts, and it's very inexpensive. Look at 10 cents, times 100. So obviously that is $10. So that's not very expensive. So we can buy a lot of those. If you want, as a lottery play or whatever, but just know it's very typical that DraftKings does very, very well during the NFL season. So next one, we have a WEN. I am not familiar with this guy, but it's currently at $20.53, but we have a $20 call strike price that's already in the money that expires in approximately 7 days, next November 18th. But look at this, only 900 open interest, which really had no interest. And all of a sudden, Friday, it had a lot of interest for some reason. This is like one of those things flying under the radar. It wasn't doing anything. It was minding in its own business. Now, all of a sudden, it's got our attention. So throughout this weekend, we need to do our due diligence on WEN and figure out what that is. What is that? Isn't that Wendy's or something? Wendy's company. So what's going on with Wendy's? Up 4%. Maybe they had earnings. Not sure, but we need to figure out. I love Wendy's. Wendy's, most of their stuff is fresh and yada yada, but looks good. Good for them. So next one, it looks like we see some straddling activity with COS. I'm not familiar. I can't remember. Cosmo Energy. So Cosmo Energy looks like we're seeing some straddling activity there that's currently active, that expires in October 21st, approximately 42 days. We have an open interest of right around 60,000 and the volume right around 55,000. So because the volume is lower than the open interest, this could mean it could be all selling activity. They're selling what they have, they're getting out of it. So, but still, it's showing a lot of activity. but we just don't know if it's buying or mixture buying, selling activity. You know, unlike the other ones that we've pointed out, it was plain as day. These ones are not. So these ones we can actually probably, you know, either do our due diligence or stay away. It's not, you know, it just to me it looks like I think people are just getting out of it. Next one, we have another Apple put. We have a $155 call because, like I said, I think what was it, 55% of the Apple were calls, 45% were puts, you know, going into the weekend. But look, it has a 40 or 54,000 option or volume when it has open interest is 57. So this could be maybe they're dumping it, knowing that Monday could open in the green. You know, so buying the calls. Where was that right here? We have 90,000 in volume where open interest is 79,000. Now this information is also available to you guys when the market is open. You just refresh it every 15 minutes and the order will change. And so it's free, doesn't cost anything. So this information is available before the market closes every day. So I mean, this is huge, valuable information. This is a gold mine, you guys. If you guys aren't using this, I highly recommend that you start. The next one is we have another Apple call. It's $157.57 call with the strike price this Friday, September 16th. We have a lot of volume on this one, 50,000, where the open interest was only 19,000. So, I mean, calls look like it's really, you know, kind of the thing here going into the weekend and Monday. We have another one right here, like a charge point. Charge point, which is currently at $17.68. We have a call strike price for $22 that expires this November 18th, approximately 70 days. We have an open interest. This one had like no interest at first, as of like last Thursday. But as of Friday, all of a sudden we have a massive amount. Looking at this is like 90% or over 99% call ratio. I mean, just buying on this one, this is huge. So investors are betting that charge point is going to reach $22 by mid-November. And so that's huge, unusual activity that we can easily pick off just by looking at this. Nikola, we have the Nikola right here, which has had some pretty good, you know, road bumps over the last few years and some lawsuits. But we have a call strike price. It's not normally on this list, you guys. We have a $6 call strike price that expires this Friday, with a 38,000 open interest and a 44,000 volume as of last Friday. So this is obviously, some of this is going to merge into the open interest. And so, but a lot of this stuff, when we're looking at this, is going to show, you know, pretty, you know, recent stuff. But if you're not that active and you can't maybe watch the stock market that often, you want to focus on open interest rather than volume. So the best way to do that, and for free on this website, is to click on open interest. When we click on it on this page, it's going to sort out everything on this page by open interest. But we want to see the entire system sorted out by open interest. Now we click the refresh button and it'll do that. So we do that, close a little banner ad, and now we can see that we see a huge amount of open interest. 187,000 open interest on Ford Motor Company. We have a $20 call strike price. And even if you're not into stock options or don't want to be into stock options, you can still utilize this information for buying shares. Again, we always follow the money. We always try to follow where the money's going, because most likely, because the majority usually is right. And so right now, this is the majority. And so Ford Motor Company, not that long ago, it touched $25 before Russia invaded Ukraine. And then all of a sudden, everything just started to start getting weird. And so if it touched $25, it can easily do it again. And Ford is just getting started. with this whole electric vehicle segment. They got the Mach-E, which is a great crossover vehicle, and the F-150 Lightning. That is a phenomenal pickup truck. It's all independent suspension. It's just phenomenal. 0 to 60 and I think it's less than 4 seconds. I've driven this thing and it feels like it's 3 seconds or less. And it is an amazing vehicle, and they're building more factories around the country, and just like what Elon Musk did with Tesla, if you build it, they will come, kind of thing, where you build it, they'll be able to build more, and their market capital will increase as well as their share value. And so it will easily, and it's inevitable, it will reach back to $25. So even if you buy it at $15, even at a share and it gets to $25, that's like what, like a 60-70% gain. And I can't recall if they're still paying dividends, but if you do get something into this that's paying dividends, not only are you holding on to something that's appreciating, but they're going to pay you every 3 months that you can use for cash or for reinvestments. And so, but we are seeing a little bit of an add or maybe a buy or sell, because with the volume, usually when you'll notice this volume gets added to the open interest because more and more people are buying into it. But it might not be a good idea buying calls long right now because of the a lot of things that's going on with like I said, the triple witching day. We have the quantitative tightening events that are happening really fast for the next several months. But also, we're the fall too. The fall is what the fall is on, what, the 22nd, 23rd? I think it's the 22nd. The pros, the enthusiasts, the guys that have been trading for decades, they all say when the leaves fall is when the stock market falls, and that is a very interesting saying. And so it's right around the corner, right after the Feds are done with the next rate hike, and so there's just a lot more downwards momentum to go, and a lot of us are analyzing between now and our next bull season. We could see another decline in the stock market system by 15 to 20% more of a decline, and so just be prepared. This is going to be a very bumpy bearish ride as we go into the next bearish season, which typically the bearish season is the first quarter. So both the second quarter and the fourth quarters are kind of a transitional phase where we kind of transition from one characteristics to the other. But sometimes the seasons can be extended. So like the bullish season can last longer, which I don't think it will this one. I think, again, we'll have probably, we've had about 3 months of a very bullish season that kept fumbling. But I believe we're going to have a 9-month kind of what's going to feel kind of a bearish season. But then after that, we should see about a 9-month bullish season. And so that's going to be very good for the economy and everything. Everybody's going to just make a ton of money in the upwards direction. But now we have to make a lot of money in the downwards direction. So we're going to see a lot of puts in this as well. And so some of them already in the money. I'm not familiar with this NEOG, but it's currently at $18 with a $30 put strike price. So it's obviously way in the money, but it expires this Friday. But if you're looking for more longer terms, look at the longer or a bigger number, 42, 133, 20, or even longer. Look at this. We have 651 days. This is American Airlines, AAL, which is currently at $14.19. We have a $5 put strike price for American Airlines. That's not good for that company. Very bearish, but it also gives us some food for thought on what's going on in the airlines world. You know, I mean, not only are we experiencing a shortage in airline pilots, a lot of these pilots they want to retire. They don't want to keep flying anymore, and they're not being replaced by a newer generation. So it's like, what do they do? And so it's just, everything is just kind of a very interesting big mess, and so, but it just doesn't look good. But we can obviously see what investors feel, because they're investing either up or down. And so, but like I said, this is great information to look at, and you can also look at the straddling. Like if you were trying to figure out unusual activity on straddling, there are 3 sections that we can look at. When we're looking at these pages, we want to look at multiple of the same stock, because that'll provide more unusual straddling activity. Now you'll see straddle and strangle. Both of them are the same concept, where you're betting a stock goes up and betting it goes down. The only difference is that the straddle is that it's the same strike price, versus a strangle are different strike prices. For example, for Apple, you're going to strangle by maybe buying a strike price that's $5 higher than the share price, and a strike price that's $5 lower than the strike price, or $2.50 lower or higher. And so, but I still recommend just try to stay at the monies, try to stay at the share price, because it'll help keep things even, as well as keeping a good amount of the least amount of time depreciation, especially if you're trying to hold throughout the day. And so, but again, when we're looking at these 4 pages, we want to look at anything that has multiple of the same stock option. So like, for example, the Bed Bath & Beyond, BBBY, we see 1, 2, and 3 right there on the first page. So that's showing some unusual straddling activity, and it's telling us that investors are betting that Bed Bath & Beyond is going to provide more volatility. They just don't know which direction. So they're betting both directions at the same time, and that it's anticipated that it will provide them gains in either direction, or regardless, whether it goes in either direction. So that's what we're seeing here, Bed Bath & Beyond on the first page. We'll click on the second page, looking for multiple stocks. And so far, we start from the top, we work our way down. I'm seeing Apple. I see 3 apples, 1, 2, and 3 apples. I don't really see anything else other than that. So we're seeing unusual activity on Bed Bath & Beyond and Apple. Let's go to the third page. I'm seeing multiple of the Bed Bath & Beyond on this one as well. We got 1, 2, and 3 of them. Let's see, anything else? See 2 AMC, 3 AMCs. There's 1, 2, and 3. We'll go to the fourth page, and there's a lot more AMCs. There's 1, 2, 3, 4, 5, 6 AMCs on this page, and a couple apples. There's 1 and 2. But yeah, going into the weekend, looks like these are the ones that were showing a lot of unusual straddling activity. So, and this is just huge, great information to always look at. I think that may conclude our meeting. Anybody have anything they'd like to bring to the table, they want to add to the meeting, have any questions? If everything makes sense, you guys ready to rock and roll, feel free to unmute your mic if you want to say anything, or you can chat in the chat room. Alright guys, well thank you very much. I will post this video on YouTube. Should be on there ready to go in probably the next hour or two. I'll be available. I'm always available 24/7. Anytime you guys have any questions, just reach out, say hi, hello, and So just be prepared. There's a lot of volatility coming ahead, and we're ready to rock and roll, make a huge amount of gains. This is a great opportunity that we have with what's to come here in the next couple weeks, and let's just be prepared, and most importantly, let's make a fortune. Thank you guys very much. We'll see you in the chat room.